Dreaming of starting your own business in Kentucky? Before you make a sale, there's a crucial step you can't afford to skip: obtaining a sales tax permit. By the end of this explainer, you'll have the insider's guide to making it happen without the headache. Welcome, I'm absolutely thrilled to guide you through this process today. Because let's be honest, whether you're opening a physical storefront in Louisville, launching a digital SaaS product, or slinging tacos from a food truck, navigating state revenue requirements can feel, well, incredibly daunting. But it really doesn't have to be. We're going to cut right through the bureaucratic jargon and get your business fully compliant and ready to thrive. Look, it's super easy to get totally overwhelmed by tax forms and government websites, but I want you to think of this permit as essentially the magic shield you need to protect your new, thriving enterprise. See, a Kentucky sales tax permit authorizes your business to collect sales tax from your customers directly on behalf of the state. Without it, you're legally operating in a pretty massive gray area, which can expose you to some severe penalties down the line. The state's goal here is just to ensure that all sellers, regardless of their physical location, are contributing fairly to Kentucky's tax system. All right, to make this as painless as possible, here's our roadmap for today. 1. Do you actually need a permit? 2. A step-by-step application guide. 3. Avoiding common application mistakes. 4. What happens after applying. And finally, 5. Pro tips and our conclusion. Let's get into it. Okay, Section 1. Do you need a permit? We're looking at eligibility and nexus thresholds. So, generally speaking, if you have a physical presence in Kentucky, sell taxable goods, or operate as a temporary merchant, you've got to register. Sure, this includes your classic brick-and-mortar retailers, but it also loops in service providers offering taxable labor. Think auto repair shops or businesses charging admission fees. It's actually pretty wild how broad this requirement is. It even applies to what the state calls temporary vendors and transient merchants operating at events or out of vehicles, and marketplace facilitators who sell on behalf of third-party vendors. But hey, what if you don't even live in Kentucky? Well, if you're an out-of-state remote seller, you trigger what's known as economic nexus. You literally must register if your sales into Kentucky exceed $100,000 in gross receipts, or if you conduct 200 or more separate transactions in the previous or current calendar year. Notice that "or" there? Hitting either the dollar amount or that transaction count instantly triggers the requirement. And heads up, if you're a marketplace facilitator, you have to combine your own direct sales with the sales you facilitate for third parties to calculate that threshold. Just a quick side note though, not absolutely every single transaction requires a permit. Selling exempt items like groceries or most prescription drugs usually doesn't require a permit at all unless your other business activities happen to trigger a nexus. Likewise, resale transactions don't count as taxable sales as long as they're backed by valid resale certificates. But we're going to talk more about how to handle those safely in just a minute. Moving right along to Section 2, our step-by-step application guide, preparing and submitting your application. First things first, you've got to get organized. Gather all your essential documentation beforehand so you can just breeze through the application without timing out or frantically searching for papers. You're going to need your federal employer identification number or your social security number if you're a sole proprietor. You'll also need your legal business name, your DBA or doing business as name, your primary address, your NAICS industry code, contact info for the responsible party, and a solid estimate of your Kentucky sales and official start date. Now, honestly, the absolute fastest method here is to just apply online. You'll start by heading over to the Kentucky Online Gateway, or KOG for short. Go ahead and create a user account and then wait for an activation email. You must click that activation link. Once you're logged in, launch the Kentucky Business One-Stop app. If you're a brand new business, you'll use the Register My Business option to get your tax accounts and your Commonwealth Business Identifier. Already registered with the Secretary of State? No problem. Choose Link My Business using your exact business name and security token. From there, just select Sales and Use Tax Account, answer the prompts, and you can even save your progress as a draft as you go. Super easy. Now, if you're kind of old school and prefer manual paperwork, or maybe your specific business structure just isn't available online, you can absolutely download Form 10A-100 directly from the Department of Revenue website. This form covers a whole bunch of tax accounts, so you'll just fill in your identifying details in Section B and check off the sales and use tax sections. Once that's totally filled out, you can mail it over to Station 67 in Frankfort, or you can even fax it straight to the Department of Revenue. All right, Section 3, avoiding common application mistakes. We're talking frequent errors and those dreaded lost certificates. You know, the state processes literally thousands of these applications, and simple, everyday typos on your fine or just leaving required fields blank will immediately bounce your application right back to you. Also, forgetting to select all the specific tax accounts your business needs, like, say, checking off withholding tax, but totally forgetting to check the sales and use tax box, that can unnecessarily delay your approval and actually keep you from legally opening your doors. So here is the absolutely crucial point, especially for you remote sellers out there. You must register immediately upon crossing that economic threshold. I'm serious. Operating without a permit after crossing the $100,000 or 200 transaction mark totally exposes you to back taxes, penalties, and interest. And here's the real kicker. That penalty calculates starting from the exact date you hit the threshold, not the date you finally got around to registering. Don't let a tiny gap in time eat into your hard-earned profits. Okay, let's say you're officially up and running. What happens when a customer claims they are tax exempt? This actually happens a lot if a merchant is buying your goods for resale or if you're selling to a government agency or certain nonprofits. Under Kentucky law, you are legally required to collect a fully completed exemption or resale certificate from the buyer to validate that transaction. I cannot stress this enough. Never, ever lose these certificates. Because if the state audits you and you can't produce that physical or digital certificate to prove why you didn't collect tax on a sale, well, the Department of Revenue will hold you financially responsible for that uncollected tax. Those missing pieces of paper can suddenly turn into massive, unexpected bills complete with a late fees and interest. Not fun. Which brings us to Section 4, what happens after applying, processing times, collection, and filing deadlines. So, if you applied online through the portal, it is incredibly fast. Applications typically process in just 3 to 5 business days, assuming no extra verification is needed. You'll get your official permit number notification via email or physical mail, and once you have it in hand, you are legally ready to display it at your business and start collecting tax at checkout. Once you start collecting those taxes, I want you to burn the number 20 into your brain. Why? Because your sales tax returns in Kentucky are generally due on the 20th day of the following month. For example, January's taxes are due February 20th. Now, here is a rather surprising fact buried in the Kentucky administrative regulations. If your business is wildly successful right out of the gate and your average monthly sales tax liability exceeds $50,000, the state actually requires you to make accelerated payments by the 25th of each month. That covers the period spanning the 16th of the previous month to the 15th of the current month. But hey, for most standard small businesses just starting out, simply circle the 20th on your calendar and you're golden. And finally, Section 5, pro tips and our conclusion. Best practices, resources, and your call to action. To wrap this all up in a neat little bow, first, remember it's the actual law to always display your permit prominently in your physical storefront. Second, do yourself a massive favor and integrate a solid tax collection system into your point of sale or online checkout software so all that math is just done automatically for you. Keep meticulous records of every single sale and, of course, those vital resale certificates we just talked about. And finally, don't forget to utilize the Kentucky Business One-Stop Portal if you ever need to update your business details or just need a little extra help. Just a quick standard reminder before we go, this explainer is for informational purposes only and does not constitute legal advice. Viewers should consider consulting with a professional for specific guidance related to their business needs. You are now completely equipped with the structured insider knowledge to confidently secure your sales tax permit and get your business off the ground. You know the thresholds, you know how to navigate the portal, and you know exactly how to protect yourself from audits. So here's my question for you. Are you ready to stop stressing over red tape and start building the Kentucky business of your dreams? Hit follow for more highly focused small business explainers, and please leave any personalized questions you have down in the comments below. We'd absolutely love to help you out.